All right, guys and gals, back to work. Boy, a fantastic day comes to an end. Hope you guys made some money on those beautiful two-legged pullbacks we talked about in last night's video. Now, getting ready for tomorrow, we got some beautiful charts in front of us right now. Lots of sideways, range-bound markets and charts right now. Now, ranges, they tell us that traps are probably where the money is made tomorrow because ranges act like magnets. They love to rotate back and forth. We got some bull traps, some bear traps on the radar for tomorrow. And not to worry, we're going to cover all my favorite traps on both sides. That way everybody has a roadmap, a game plan to make some money tomorrow as well. Before we dive in though into my favorite trades for Thursday morning, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe to our channel. And as always, guys, if you enjoy these videos, if you like these lessons, hit that like button, will ya? And give me a hell yeah, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though. Let's go make some more money on Thursday morning. Now, charts are all ready to go, as you can see here in front of me. I got my NASDAQ, my triple Qs are all ready, the E-mini and the SPY is ready. I have two very important clues on the charts in front of us that are telling us where the winning trades are waiting for us tomorrow morning. One of those big clues is right here on the 60-minute, these hourly time frames. Let's grab the S&P first. S&P and NASDAQ are very, very similar right now. There are three kind of components that go into the first big clue we have on the hourly time frame. First things first, we know this is an overall bull market. That move down we saw yesterday is pretty much a big, deep pullback in an overall bull market. It's one aspect of clue number one. Second thing is this range above us. And again, NASDAQ is the same situation right now. Ranges act like magnets. And so we talked about last night in the video, this seems to be a great spot to be a buyer right now to go back up into that range up overhead. But the big challenge right now, and one of the most important clues in the 60-minute time frame, is this strong move down. So remember, anytime we see a strong move lower like this, we have to expect the sellers are trying to retest that low before they let this mark go back up into that range above us. So one really big clue on the 60-minute time frame is we're bullish overall. That range above us is begging to drag this thing back up again. But most important thing is don't count out these sellers. I wouldn't be surprised at all if we see another shot going lower tomorrow, or most importantly, if we run higher, a shot lower before we make that run back up again. Now, this is important information because this gives us more of a bigger picture kind of game plan for the strategy for tomorrow. But you know what it doesn't do? It doesn't help us time the entry. I like to use these hourly charts for the bigger picture stuff, but timing the entries, I'm going to use a faster time frame, a tick chart to do that. But before we do that though, let's check schedule for tomorrow because tomorrow is another busy day tomorrow. There are two things on my radar for tomorrow that you want to keep in mind as well. First things first is the big news tomorrow morning. It's the ISM Services Index. That is a jobs market report. We know the jobs market is a very big part of the equation the Fed is using in the fight against inflation. Yeah, I get it. ADP, job, they're all decent reports, but if I had to guess tomorrow, I'd guess that 10 o'clock ISM services number, that's the one that has the potential to move the markets the most. So keep that on your radar tomorrow. The second thing you want to remember is we got non-farm payrolls, the jobs report coming out. The biggest news of the week is on Friday morning. And the reason why that's important is because markets do funny things late afternoon before big numbers the following day. So earlier the better tomorrow. Be aware of that ISM Services Index. And of course, we'll have a front row seat for that tomorrow morning in our trade. Now let's get back to our charts though, because as we know, the money is made on the charts, right? We talked about how this 60-minute time frame is great for the big picture. We're bullish overall. That range acts like a magnet, but again, don't count out those bears just yet. Now over to tick charts. Tick charts, they make pattern recognition a lot easier, and so we use these for entries. That is a 7,000 tick chart, all the time frames tonight. In the upper left-hand corner there, all the charts. And if you're watching for the first time right now, this is the 21 EMA. It is the only indicator we need to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. There's one really, really big clue. I talked about this in the introduction, and of course it is this sideways trading range. Now ranges, two things you want to think about when it comes to ranges. First of all, they act like magnets, right? So as we go down, we're going to go back up. As we go up, right, back down, right? So ranges act like magnets. More importantly, they love to rotate using things like pendulum swings and expanding triangles, rotation, back and forth, back and forth. Once you understand how range rotation works, there's no limit to how much money you can make in these range-bound markets. Now, knowing we're bullish overall, but knowing the bears are still hanging out there right now, I've got some great trades I'm looking for off the high. Got some bull traps up there, potentially some breakouts going higher. I have 3, maybe 4 trades, both long trades and short trades I'm watching around the high of that trading range. My favorite trade for tomorrow, though, is certainly going to be the bear traps underneath these lows. Now think about this. If this range is a magnet, and we've already made that big move down already on the 60-minute time frame, there probably are not going to be a lot of big money bears waiting down there. I'll bet there are some beautiful bear traps below that trading range. Now, when I say bear traps come in lots of shapes and sizes. For example, one of my favorite types of bear traps is kind of a combination of 2 trades. It's a failure pattern. For example, if we run lower, Remember, I have no crystal ball. I don't know how far this move down will go. It may go a bit further than I'm illustrating right now. I can't pick the bottom on this. What I do know, though, is that as this thing pulls back to that moving average, this is a horrible place to be selling because of the range above us, and we're already very low overall on that 60-minute chart I mentioned earlier. This is where a failure pattern, like I teach in our free video classes, comes in handy. I'm going to trap the bears in. If I see bears trying twice here, see, now I have their stops, right? Now you're trapped, and if you're trapped short and I stop you out, right, get stopped out, you buy your way out. This is an easy way to squeeze this thing and kind of slingshot that thing back up into that trading range. That's called a failure pattern. Now, failure patterns oftentimes pop up nice and strong, which means I can now look for the add-on or the re-entry with what I call a trap pattern. This would be a bear trap pattern. Now, trap patterns are very, very important to learn. Everyone needs to learn these. Very simple. It starts off with separation off the moving average, 21 EMA. Separates a bit off that 21 EMA. Very important. Next up is a higher high in price. The higher high in price now sets the trap up because now the trap will come in right below that low. In my trade room, I call these a failure into a trap combination. Now that's kind of the perfect scenario coming off of that low. Let's talk about some variations of that. For example, sometimes we get that strong run down and there's so many buyers, it bounces hard off of that low. I want to get that run here and go 1, 2, so I can risk small to earn large as it rotates back to the side of that trading range. If we see something like this where it kind of pops right back up again and then we get the 1, 2 like that, I don't want to buy way up here because now my risk is there, reward is like that. That's not going to work very well. That risk reward is way off. If it bounces hard off of that low, I want you to think about trying to get in underneath one of these prior swings, strong green candle, closing above the 21 EMA. Now think about this. This now gives me a much better risk reward ratio. And if for some reason, for example, sometimes it'll bounce hard off that low and begin to grind going higher. These can be tricky because we don't actually get that pullback right away. We don't get that trap right away. These can be tricky because you'll get impatient on these. At least I always do. What I do is this. I'll mark a trend line off the highs, okay? Bring that trend line down off that low. This makes a new channel, okay? This kind of V-bottom channel like this, we call these pop and grind channels in our trade room. What I'll do is I'm gonna look for the first test off the low of that channel. Now, if we're lucky, it'll be right below a prior swing like that, right? It'll be a trap entry below a prior swing. Oftentimes, though, all we get is below that 21 EMA. That's where failure patterns come in, right? Trap the bears getting short below 21 EMA and buy into their stops. Failure patterns, of course, they lead into pullback combinations. Really any of the entry patterns you guys are learning in our free video course. I love traps. Could be a trap pattern, a failure pattern, a pullback combo. Most important thing is it needs to be the first touch of that new channel. Again, want some bear traps down there, but if V bottoms off that low, find that new channel and don't miss that first test. Now, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns already. I get a ton of great emails every week. People making money with failures, traps, V-bottom, hidden channel pullbacks like these. But listen, if you're watching for the first time right now, this might be a brand new strategy for you, a completely new language to learn. What are failures? What are bear traps? Don't you worry. I teach this entire strategy. I have hundreds of examples of failures and traps. I go into a lot more detail, a lot of examples of these in our free video classes. What I'll do is I'll put a link up top for you, upper right-hand corner, grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room to know where the best winning trades are going to be each day. More importantly though, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, learn failures, traps, and a hell of a lot more in that short video series. The bottom line is, guys, the markets are way too good not to be making consistent money right now. If you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link, take that free course, learn the roadmap. Perfect for anyone who is serious about making money in these markets. And again, all the details are covered in that free video course. Also be aware too, I'm gonna put all the important links tonight in the description of the video. Grab the free video classes. Don't forget, we trade together every day, 8 o'clock Eastern time. I'll put trade room membership information there for you. And also too, if you're on Twitter or X, I post videos and charts and mindset stuff throughout the day. If you're on Twitter X, give me a follow. My handle's down there. All the details you need to follow along and learn more in the description of the video. But again, start first on that free video course series, learn the roadmap, and most folks start making money on their own simply after that free video course. But now you know some variations here of that bear trap I want going lower. Now, I want to talk about going higher in a second. I have a bunch of great ways to make money going higher here. But before we do that though, let's talk about a couple more variations of this first here. First of all, we may run lower. We may get that 1, 2, we may get that nice bear trap down there, pop it up. And sometimes what happens is, again, remember the bears have a lot of strength behind them right now. They may hold the underbelly of that range, breakout pullbacks very common, and they may run this thing right back down again and take out that low. These double bottom retests are oftentimes the most lucrative trade you get each week because think about it. Anybody who sells right here on the breakout pullback, they're taking their profit down here. So sellers up here become buyers down here. Remember, we're not an overall bear market. We're an overall bull market that got knocked down by that big move down we saw yesterday. The same reason why I like buying a bear trap down here is even more of a reason now why I love buying the retest of that low, that double bottom retest. Now remember, again, this is not complicated, right? Let those bears try once. Let them try twice. I'm not going to pick a bottom on this. It may keep going a bit lower than that double bottom, right? This is going to be perfect on this. But once those bears try twice now, squeeze those stops and run that sucker higher. And again, don't forget, once it goes higher, grab that, what was it again? That separation off the moving average, that higher high in price, and that sets things up for that trap pattern. So guys, if we do end up seeing another leg lower on this, it is not a full-blown reversal. It's another bite at the apple. It's a gift for the buyers because again, this is the last place you want to be selling down there. Trap those rookies in, squeeze those stops, and remember, think about that rotation back up into that range up overhead. Now, one last thing. If we were to get a big drop going lower, remember, the bears have a lot of momentum, and in all reality, it wouldn't totally surprise me if this market went another leg lower down to that breakout pullback zone we have over on the 60-minute time frame. So I wouldn't be surprised at all if we did see a very strong run down, especially with that big news coming out tomorrow. If that happens, you now want to start thinking about a breakout pullback off this previous trading range. And what does that look like? Well, It's a two-legged pullback, a lot will be talked about in last night's video. So if we see a really big, oversized move going lower here, whatever we do, we're not going to chase after it. The key will be what was support here now becomes resistance, right? So what I think about now is a two-legged pullback. And when I say two-legged pullback, think about a measured move that goes a bit too far, right? A measured move, like back over here, right? Here's a measured move that goes a bit too far. We talked about this last night on the video, right? Big move down, one leg, two leg. It's a measured move that goes a bit too far. Then what do? We trap the buyers in, right? And back down we go. We mentioned this, of course, last night. That was the game plan in last night's video. So it's a very similar game plan. If we get a big, strong run going lower, I want to get above that 21 EMA. I want to think about that measured move. Again, that goes a bit too far, a bit more than a measured move. This, of course, now becomes an overhead area of resistance. Now, at this point, it may keep going, right? It may keep going up there. It may wind up grinding and becoming one of those V bottoms I mentioned earlier. And if that's the case, mark that high, mark that low. What do we do? Yeah, we don't miss that first test off that low. That is a possibility. However, if we get that real strong run down there, a very good chance here, they're going to pull it back, retest that low before they run back up into that range up overhead here. If that happens here, the entry is the same thing we saw over here, right? Wait for the pullback, buyers once, buyers twice. Don't pick that top. Look for that two-try failure. Remember, as it goes lower, what's the entry pattern? It's always going to be the bull trap combination. It's the same pattern we mentioned earlier, a failure into pullback combination. Look up here, right? Look up here, right? We run up, 1, 2, failure, and then guess what happens? Guess what happens? They pop back up and go right above that prior high. There's your failure into trap combination of the high. Again, they're always a bit different, right? I'm simply illustrating things right now, but you get the point, right? Pop it up, two-legged pullback. We got one try, two try, trap those buyers in. That's a failure pattern that you guys are learning in the free video course. And as it goes lower here, don't miss that bull trap pattern that we saw right there. If we're lucky, we'll draw a trend line off those lows, up around that high. Trend line off those lows, up around that high, right? Man, oh man, those are fantastic shorts as it rotates back down to retest the low. So again, if we do see a really race going lower, don't chase after it. Short that two-legged pullback. Again, failure pattern into trap pattern we saw here this morning, late morning, early afternoon. That's the game plan as we go lower. Now we've covered the variations of this now. Now let's get serious now about going higher here. Because again, there's a good chance that this market rolls higher. Not my favorite trade for tomorrow, but that's all right though. My goal tonight is to give you guys a roadmap. That way you're ready for anything these crazy markets throw at us. How about some NASDAQ right now? NASDAQ, very similar. It is a bull market up into a trading range. That range above us is a magnet. But again, that strong leg down is going to put up a fight. These bears are going to try to whack this thing back down again, and they'll definitely try to make another leg lower, ideally into that breakout pullback zone underneath us. A tick chart, a 4,000 tick chart here on the NASDAQ. This is a bullish market into a trading range. Now, whenever we have a range like this, what do we know? We know that ranges are magnets, and we know they love to rotate back and forth here. We also know that below these lows over here could be some fantastic bear traps. And so all the same bear trap stuff we talked about on the S&P, that failure into that trap combination, and of course that V bottom, the variation of, right, all the variations we talked about before on the S&P can be applied here to NASDAQ as well. So to save some time here right now, the same exact game plan mentioned earlier on the S&P can pretty much be copied and pasted over to the NASDAQ as well, including that breakdown, that two-legged pullback, and that retest of that low. Let's now talk about going higher here though, right? Going higher. The most important thing to remember going higher is above these highs, who's waiting up there? Bears. Why? Because the strong move down we saw on the 60. So the one thing I'm very cautious about is don't chase it running higher, because as we poke our head above these highs here, bears are going to be waiting up there to eat our lunch, to trap the buyers in. So as we go higher, there are two types of bull traps I'm looking for tomorrow. I wouldn't normally look for bull traps out there, not in a bullish range like this, but again, because that big move down was so obvious. Okay, so two bull traps up here. One of them is a classic bull trap. It kind of looks like this one right here, right? Where we pull back, the buyers try once, we go lower, the buyers try twice, right? They get above that high. This is it's a classic technical bull trap. We go up, buyers once, we go lower, buyers twice, above the high, right? And back down again. The best way to short a bull move like that, an overall bull market, always going to be a bull trap. Now, a lot of times though, we get what happened on the S&P, right? Where it'll run up, roll lower, and start grinding down, and we draw trend lines off that low, off that high, right? Like that is another great setup right there. That's one more variation of it. We can find that now on the NASDAQ. We pop up, we don't get the 1-2 bull trap here, right? Again, technical bull trap will be that one. It V tops here, begins grinding down, right? We know now, mark off that low, mark off that high. And again, first test off the high. I do want to be above that prior swing. Easy. I know nothing's guaranteed in trading, but these are almost guaranteed winners when you get that nice V top off the high. And again, that range below us acting like a magnet. So those are the two variations of bull traps I'm looking for off of that high. Now let's talk about if this thing gets lit up, right, running high. I got big news tomorrow morning, no doubt. Could easily happen to be a nice, strong, big nice big move going higher. The first thing is if we see a strong move going higher that begins to separate off the 21 EMA, that is always a good giveaway that this thing wants to keep going. Remember, separation equals strength. Separation equals strength. So if I see a strong pop higher, a shallow pullback and a higher high, we now start looking for those trap entries as we go higher. So on the way up, right, if we take out those highs, I probably should draw a little better here, right? If we start popping up and start seeing this thing get well through those highs right there, and we start seeing separation off that 21 EMA, separation equals strength. And again, that's an example where buying those, we're buying those bear trap entries on the way up will make sense up here. Now, one cool thing about ranges is that when they break out like this, when they break out like that, pop up and keep going like this, right? The breakout leg becomes the measuring leg. So if I can get a bear trap entry above these highs, what I'll do is I'll look at the size of that breakout leg and use that breakout leg, the actual physical leg that breaks out of that range. That's a measured move leg. I'm going to measure the size of that breakout leg, pin it the low of that trap entry, and that gives me now a target up overhead. If you want to make more money, get better at holding on to your winners. And one easy way to do that is by knowing how to read a range breakout or knowing how to use measured moves. We talk a lot about measured moves in that free video course I mentioned earlier on here in the video. So again, if we see this thing really rip going higher here and separate off the moving average, that creates a bear trap opportunity, and we can look for that tomorrow morning. The next one is that once we start getting that big move higher, once we get that measured move taken out up here, once that measured move gets taken out, we don't want to buy high up here anymore. Now we flip this now into a breakout pullback. We talked about this earlier on the S&P chart, but going lower. This time, what is resistance becomes support, right? What was resistance now becomes support. Now, remind me again, how do we buy a breakout pullback? It's all about a two-legged pullback, right? A two-legged pullback, one leg, two leg, a bit more than a measured move, right? Nothing different there. Ideally, that will put us back in some area. Could be here, could be all the way here. I don't know. What I do know though is that two-legged pullback will tell me the general area to look for the entry. I'm not going to pick the bottom on this because it may end up running all the way back down again. And if it does, by the way, if it does run lower here and begin to grind going down like that, you know what to do, right? Mark off that low, mark off that high. Don't Don't miss that first test, right? Same thing over and over again. However, if we start seeing these bears come in, right, and they start trying once and they try twice, we know all of that strength going higher is going to want to what? It's going to want to retest that high right now. We're overall bullish on the higher time frame. So trap those bears in, use that same failure into, what was it again? You got it, trap pattern combination. It's that shallow pullback, separation is strength. It's the higher high in price. And of course, it sets up for that trap pattern. The target is back up to retest the high. So think about this. Whenever I think of a breakout pullback, I think of a measured move going up. Again, if we're lucky, we'll get that trap entry on the way higher. Either way, though, once they complete that measured move target overhead, now wait for that measured move that goes too far, a two-legged pullback. Don't pick the bottom on it, right? Trap the bears in the failure pattern, and then add more or jump in again on that bear trap as it runs back up to retest the high. That is the most common scenario we get after a range breakout going with the overall direction on the hourly chart. The final one here is not as common. It's called a pop and grind breakout or a pop and grind channel. We've talked a lot about these already. If we were to get some news tomorrow morning, 10 o'clock Eastern time, if this thing pops and begins to grind going higher, you know this already now, right? You're going to see these in your sleep. Once it grinds up like this, mark that trend off the highs, bring it down around that low, look left, and again, think about this. All of these prior areas of resistance now become areas of support. I always like to go out, look for a prior swing low, get under one of these prior swing lows. That's my favorite way to do it. It's a trap pattern. But the most important thing is the first test off the low of that channel. It could be a trap pattern like we're showing you here. It could be a failure pattern below the moving average. Failures turn into pullback combinations. Now, on this one, where's the target now? Good question. The pop leg, right? That can a spike up leg. The pop leg of the pop and grind pops up and grinds higher. The pop leg is the measuring leg, all right? Be aware of that. Take that leg, pin it right here, and again, you can make a lot more money in trading, not by trading more often, but by getting better, being more patient, and of course, that comes with knowing where that market wants to go. That becomes the big target on a pop and grind breakout or a first test off the low of that channel. Trap, failure, pullback, right? Measure the right target there, and that will give you an area of where you want to wait for the exit. All right, guys, boy, I'm getting excited about this stuff, just talking about this stuff right now. But that is the game plan for tomorrow, how we buy it, how we sell it. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with us. The easiest way to make money in these markets is to learn and trade along every morning in our trade room. Don't forget, once again, all the important links you'll need in the description of the YouTube video. Start first in the free video course, learn the roadmap, start making money on your own, and that's the game plan. Hope you learned a bunch tonight. Hope you earn a bunch of this tomorrow, and hopefully I'll see you sometime soon trading with us, 8 o'clock Eastern time as a member of our trade. In the meantime, be well, be nice out there, and be here next time. Adios, amigos. Bye for now.